This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe. So what I want to do today is I had an email exchange, a really good one with one of my subscribers who was asking me a question about a specific trade that he took from the subscriber list. And how he should handle this specific exit. It's a little unique in the way it played out, but I think it's something as we go through. I'm going to give you my 2 cents on it. Now, what I get from getting these emails from different people, and what I try and get across to everybody is that, yeah, you have your own personality. Everybody's a little bit different. You're not necessarily going to do it the same way I am. I'm going to show you the way I think, and when I'm looking at this type of a trade setup, and how I handle it. All right. And how I handle it mentally, because that's really what this is all about. You need a strategy that you can live with and die with, because you're going to have periods where you're going to feel like you're dying. It's not going to be, win after win after win. So you have to kind of accept that sometimes there's a period where you're just adding crumbs. You're just adding crumbs to the pile. You're not necessarily going to have big win after big win. At least that's the way I think. All right. So I'm going to show you this example. I think it'll be good. If you have an interest in learning about some of the techniques that find these patterns and or identify the entry strategies, I would start with the book. It's at rabilstockresearch.com/book. Also, if you like this content, please hit that like button and also subscribe. Okay, so the stock is CF. And let me just make sure everyone's up to speed. I've got 5 charts. Here, I've got the monthly down here in the bottom left, and the weekly, and then a daily here, hourly here, and then I've got another weekly, because I like to look at the relative strength, and I do like to look at the RSI, and then on this one, I can always switch it to a different time frame if I want. It's on a weekly by default, but it can be switched around. All right, so that's my layout. This is my ACP layout, but I have this kind of look in most of the software packages that I use, just to have an hourly look. In addition to the monthly, weekly, daily. All right. So the symbol CF, and what I like about this example is that it's one of the better looking stocks in the agricultural input area. And so again, versus its peers. So, but the issue is that one of the stocks in that area got killed. And it's a bit of a really bad stock. And I think it must have had a really bad earnings report. It got hit, and it brought down most of the stocks, including CF, after CF had made a really nice move to the upside. So let me just bring you up to speed. So when I highlight these, because I like how look at this big developing pattern here. Now, I actually like playing this type of pattern as a monthly, weekly setup. And when I play a monthly, weekly, what I'm going to talk about today, I do not get into. I don't focus in on. I don't really take a lot of. I don't change the plan. In other words, I do the best I can at saying the plan is this when I get in, and I'm sticking with it, because I know that there's a pretty high probability in a pattern like this, in the way that it's developing with the ADX and the way this is taking place and what's happening overall, that this wants to go higher. Now, the question becomes, does it want to go higher right this second? Is it next year? It could take a little bit of time to get itself cooking to the upside, but I'm willing to wait on those monthly, weekly trades and let them, marinate a little bit here before it gets going. All right. Now, when it comes to a weekly, daily trade, you don't really have that luxury, because the daily chart is just moving around like crazy relative to the weekly. I mean, you can see what the weekly's done. It did have a topping tail last week, but it's made all higher lows. And, we made a really nice bottom off a pinch play, pushing off here. We've got a zero line reversal, all that. So the bigger picture pattern, even though we had kind of a bad week last week, to me, it doesn't really affect anything on this. But what the question comes in is I have a subscriber who said he played this. He was looking at this. We were talking about it. He liked the overall look. It had turned up. It was a little awkward here in the way it played out initially. And then as it turned here, he played it in this area right in here, which is, there's nothing wrong with, this is a good looking pattern. I think there's nothing wrong with that entry really. But what you have to understand is, when we're looking at a weekly and a daily, all right, you're going to have a lot more situations where you go and hit one target and you get stopped out of the second. All right. Now, no matter what you do, no matter what your strategy is, no matter what, how you want to play it out, it's just, how why you don't. I personally don't like giving these a significant amount of room, because what ends up happening is you have the potential to give them back. So what he did was he was in, he took the first piece here, and I don't know, he took a quarter or a third. I'm not sure how much. All right. So he takes his first target. Now, what I do in this situation is I go to a break even. So my stop would have been here and I would have been stopped out yesterday. All right. His question was, we got a king bar and a queen bar. All right. Now, I do think those qualify as king queen, but this really isn't a wide range bar. All right. So do you see this king bar? It's a good bar, but it's not a king bar, because this is the widest range of the last 7. It's not an official king queen. I mean, it's close enough, right? I don't have a problem with it. You had an outside reversal red bar, right? So I don't necessarily disagree with his assessment of what was taking place. All right. Now, I said to him in response, he said, well, don't you think I should be getting out of this? And I basically said, look, I follow my plan. I'm going to follow my plan. And if I'm not following my plan, what's going to end up happening is sometimes I'm going to be right. Sometimes I'll be right. And sometimes I'll be wrong. Okay. And this happens a lot on the monthly weeklies. If you try and guess as to which will work and which will not, you will miss monsters. I went through 10 years of past trades to study this. All right. And I couldn't believe, by raising the stop to break even too quickly on a monthly weekly trade, you miss out on monster winners that change the entire performance of how you do. All right. So monthly, weekly, don't be in a big rush to get this into a break even. If it's got a good pattern, you take a target, maybe cut the risk in half, and then let them breathe. This is a trend following method. We're trying to catch a big trend in something that has some real potential. All right. Now, when it comes to the weekly dailies, it's a little bit different because of the volatility. The trends don't last as long. And you get a reversal bar like this, you have the potential for some kind of a setback or a pullback. So he was saying that he was keeping his stop, I think, below this low here. And he was trying to decide, do I just get out after this reversal bar or keep my stop where it is? And my answer was, I'd be at a break even. All right. Just because that's the way I would do it. Now, one of the things I like to look at, I don't disregard price action. I like price action. I think it's important, especially with the shorter the term the pattern, the more important the price action is. We can obviously see sometimes these reversal bars lead to bigger declines. Other times you get one bar down and then that's kind of it, right? One bar down and then that's kind of it. So we don't necessarily have to expect this to just plummet to the downside. But if you're going to incorporate this into your plan, I think it can't just be king queens. It also has to be big topping tail bars. And I like them to be wide range. All right. Like a wide range topping bar. If that shows up here, then we put the stop, you raise the stop from here to below the low of that bar. Now, in this case, it would not have really helped very much. He would have made a little bit of money because it gapped down. You would have only gotten, a little bit better than break even in this situation. But in most cases, you'll do a little bit better than that. But the other thing you want to be on the lookout for are these narrow range doji bars, right? I mean, so it's one or the other. If you get a narrow range or a wide range and you're in these, then you have the potential, if it's in your plan, to change your approach. You can tighten the stop. Now, what I suggest and what I actually like better than the price action is using the DI, because if DI is confirming, then you want to give it a little bit more room. If it's not confirming, then you raise the stop, and then if it goes up another bar, you keep doing that until you get stopped out, or it actually confirms. Once it confirms, then you don't need to keep raising the stop. But that's the way I think I would handle this situation. Now, what I'm telling you right now and what I told him is not helping him at all. All right. So, I mean, I do the best I can if someone wants to get my opinion on something. I mean, everyone knows it's their decision. My subscribers knows, look, they're in charge of their own trades. You have to own your own trades. You can't rely on me to do your own trades. And the reason is my personality is different than yours, number one. And number two, you're never going to get to the point where you're consistent if everything you do is based on something I've told you. Right? I mean, it's just not going to work. It's not going to work for anybody. So that's the way I run my subscriber base. And everybody seems to appreciate that. I think they understand and they agree. And every now and again, I get guys asking me questions, and I think that's great. I don't have any problem confirming or refuting or answering, this specific question about the approach. Should I be changing my approach? Yes. I mean, if it doesn't sit well with you, and this is the way I used to this is the way I look at it. All right. And I used to go through this a lot. So if I had a position on where I was so uncomfortable with the price action that had taken place or something that had happened that I couldn't take my eyes off the screen. I was watching it all the time. Then I probably need to do something. All right. I mean, because you can't be sitting there watching this nonstop. And it's just not, it doesn't serve. I don't think it helps anybody thinking that way. If it's a weekly, daily trade, I mean, if it's a day trade, that's different. Then you have to sit there and watch it. Even if it's an hourly trade, you have to sit there and watch it. But if it's a weekly, daily, you should not be watching your screen minute by minute. It's just not, I don't recommend it. All right. So this is the way I think. The way I think is if I get in this position and I get to a minor little profit and I get to a break even, I want to look at my log sheet and see that I've taken a tiny little profit. All right. I got a positive number here. Right. And then I've got another line item showing the trade of what's left at a break even. All right. I mean, I love that. That's my favorite thing, is to get this at a break even. And what I've noticed over time with the weekly dailies is they basically just add to, it's like adding crumbs to my performance on my monthly weeklies. I don't necessarily hit monster winners every single time. All right. A lot of times I'm hitting singles and doubles, almost like a swing trade. All right. I know the swing trading is mostly on weekly, on hourly, in the daily and the hourly, but I have found, at least the approach that I've used, that it's if you follow what I'm doing, that you're going to hit a lot of singles. You're going to take one target, two targets, a lot of two target trades, and then get stopped out on the balance on the first target again. And you take, it's a decent little profit. You're adding a decent amount of crumbs to the bottom line. All right. I mean, those can help over time. All right. And then every now and again, you catch one. It goes, and instead of doing this, it might check back, and then it goes, and then it goes, and then it goes. And I know I've gotten a few emails from guys like on a Palantir, PLTR last year, who I think they took normally we're looking to take a 1R, 2R, 3R, and then trail the last one and see how much you get. I think he told me he was up at like 15R or something like that. And so you get that when you do that. All right, you're going to see your log sheet is going to tell the story, because all of a sudden you're going to put this monster gain in there. It's the odd monster gain that is mixed in by a discipline, all right, that is going to get you where you want to be. It's not, and then the rest of it is small wins, small losses, small wins, small losses, right? You just want to keep being smart. Now, what's going to really help in this situation, the better your entry, the better your odds of getting to more targets. All right. Now, if you wait for more confirmation and you buy late, all right, you might get that first target, but the odds are, you're probably not going to live through a pullback. So the better your entry is, the better your chances of living through pullbacks and going on. Now, this is an incredibly volatile stock. Now, here's what's going on right now. There's a lot of volatility, and this is a part of the materials sector that got hit really hard last week. Terrible week for materials, right? Where tech had a good week. You had consumer discretionary had a great week. You had comm services had a great week. You had energy had a terrible week. Transports had a terrible week, right? So if you're in an area that's having a bad week, you're fighting. You're on a daily trade. It's just fighting an uphill battle. So these are the types of things that the way I think is 25 trades. I've said this ad nauseum, right? You do 20 to 25 trades following your plan. And then at the end, determine whether you want to put this into implement. Say, every time I get a reversal bar, I'm raising the stop underneath and I'm going to take something, because there's just too much volatility on the daily. I have no problem with that. What I used to do, which is the reason why I do what I do now, is I used to take the trade, and if it looked okay and I followed my plan, I'd go to a break even without taking a profit, and I would give back the whole gain and gain nothing from this. Nothing. All right. And talk about being frustrating. All right. At least when you take a minor profit, what it is telling you is that you're following a procedure that is working. All right. It doesn't mean you're going to get rich off of that trade. All right. All it's doing is you're following an approach for consistent path for an equity line. We want the equity line to be consistent. It's going to have some swings in it, but we want the drawdowns to be smaller. We want it to be as consistent as possible. All right. So I hope this helps. I haven't given all the details on exits, but I think the understanding of what my mental state is and the way I'm thinking is this is just another trade in a whole series of trades. And I'm not going to get too caught up in trying to catch the perfect exit. All right. I spent 4 to 5 years studying exits because I was trying to get the perfect exit. And, as an intraday trader for years, I got pretty good at finding peaks and bottoms and everything. No doubt, it did help my understanding of what takes place over time. But it was still the situation where the most important part about your trading log sheet is catching that odd win. And if you're going to you're going to get stopped out every single time there's a bad bar, then I can almost guarantee you're never going to catch the odd win, the odd big win, the big one. All right. Now, every now and again, you might catch the one that just goes straight up. It just never turns, never has a bad day and goes straight up. That's going to probably happen with a 1 out of 100. All right. But 1 out of 10, 1 out of 20 are going to have some volatility, and you could still catch 4, 5, 6, 7, 10 R by just hanging in there with your plan. All right. I hope this helps. Let me know if you have any questions.